it's nice to catch up. You know, it's.
Right.
You know, I know
Have you started?
I've started again.
Right.
I know we do that for the camera, but it's you know we chat all the time about various stuff, and I just think it's nice for us to put out a message maybe from time to time, if people are interested as to what's happening in the property market and the mortgage market and the investment market, because it touches most people, whether you're a tenant or landlord or a seller. And I think this is a particular funny old time of year, really, in so much of the market closes down, it really doesn't get going at all in December.
No.
Most people are thinking about Christmas since your beautiful tree.
Thank you very much.
You're welcome. And it's just the way it is. You know, end of November, early December.
I think people have their mind on other things, which is probably about right.
Particularly this year with COVID and
I think particularly
this
this year,
new variant now running around.
But have you been quieter because of it? Because we haven't. I mean, I would say October and November were two of our busiest months in the last couple of years even.
The market sort of started to run out of steam in the midsummer for us. You know, we had such a busy period up to the end of June, much helped from Richie Sunak and his stamp duty holiday. And we saw quite a significant increase in prices for a lot of property, particularly freeholds in the city. Not so much leaseholds, which is an interesting conundrum for people. But so we're confident about next year. We think there may be a slight further increase in price.
But what about prices? Absolutely. So especially where we live down here, prices are always going to hold. I mean, you know, we got the downs and we got the sea. There's always going to be more demand than supply in that respect. But there has been a lack of supply in the last 6 months.
So how's
that?
That's the combination of, bad. I mean,
do you think that's going to change? Do you see that changing?
I think it will change. It'll settle down a little, because obviously December, very early Jan, is quite a quiet period anyway. And we've certainly, I think we've lined up 15 properties to launch on December 26th, which is one of those strange statistics that Rightmove is its busiest day of the year. So watch if you're thinking of moving, have a look at the website.
It's interesting you say that. I mean, it's difficult for us to know what's going to happen over the Christmas period with inquiries. When I look back over the last 25, 30 years, just look back over the last 5 years even, we've had some massive spikes Christmas Day and Boxing Day. Whether it's just people had enough of family and eating and they want to just have a look and see plan early for the new year. But we've had some immense numbers of inquiries on, I say, Christmas evening, Boxing Day, and on the 27th. Yet other years, virtually none.
No, it's unpredictable.
It's so unpredictable.
But statistically, Rightmove is its busiest day of the year is the 26th of December. So we certainly, as agents, answering your question about stock, weren't able to convince clients they should launch in December. Fair enough, building up to Christmas, kids, family holidays, etc. But December the 26th was a good date for them. Christmas had finished.
Yeah.
They're not going to get inundated with viewings. We'll just get the inquiries. Is anybody particularly keen? We can obviously arrange an appointment. So it's just a strange time, that particular day. And then we'll run into January. And frankly, unless you've got a crystal ball, you won't know. But certainly stock levels are probably down. Well, they're reportedly down by the RICS, down 38%.
Wow, astonishing big number.
And viewings up. Viewers are 25%. Right. So there's a complete sort of discombobulation of events, really, and the two don't marry up at all.
Yeah.
And that puts pressure on prices, because unless you have more viewings, less property, then you're going to get the prices are going to edge up, and that's been, you put your house on the market in November, you're pretty much guaranteed to sell it during the month for more than you're asking.
Crazy.
That's been the market.
Really weird.
And whether that it's the bit over the guide price is at risk in terms of falling off in a busier market. Those premiums people have paid, whether they're sustainable in terms of real value, I'm not sure.
No.
But again, if we have another chat at Easter or whatever it might be, then we will know what's happened.
Yeah.
But
I mean, lenders are still supportive. I mean, we've seen that interest rates didn't go up as they were predicted, but lenders still put their rates up. So they're the amount lenders pay to borrow money stayed the same, but they preempted the increase. But it was so small. It was a point of a point.
I know.
And it really had no significant difference at all. And in fact, the Bank of England, there was a piece I read this morning saying that they're now looking at affordability, and where lenders were when they for new mortgages, lenders would look at the current base rate and will you be able to afford it if there's a hike of say 3%. That was kind of their affordability calculation. They're actually looking at removing that now. Now I don't know what impact that will have, but affordability still will be the buzzword. People still have to afford the mortgage, but it'll be based on the affordability today rather than if there's a big increase, which is an interesting move actually. I mean, it shows that there's confidence in lending.
That's a massive confidence position to take.
It really is.
And whether or not in the background they'll still be doing that or something similar, but maybe not so officially.
Maybe it gives the lenders the freedom to just be a bit more choosy of who they want to lend to, and if it's a good case and the old affordability rules just pushed it out, but they want to lend on it, it gives them the ability to do that.
Yeah, I like to think that the guy who runs the Bank of England, he said in November to his chaps who form his committee, do you know what, we're being told we're putting interest rates up. Everyone's saying we're putting interest rates up. Everybody's starting to edge up their rates. Do you know what?
Let's not.
Let's not. Let's leave it a bit.
Yeah.
You know, let's play.
The truth is probably
because we are supposed to be independent, rather than being told by the press and government that actually we should increase.
And property is still the cornerstone of our economy. It always has been.
If the property market's good, there's confidence in other areas. There's no doubt about that.
No doubt about that.
There has been confidence in the property market, which is unusual, but during and post COVID, but to a degree, a lot to do with the government's help in regards to the stamp duty, which inadvertently pushed up prices. I'm not quite sure how much money you saved in the end, but that was the.
But it wasn't about even. I mean, people assumed it was about saving the money, but actually it was about confidence. That's why they did it. It was about that, and it did. I mean, we saw a massive push when that happened.
Mostly for freeholds or leaseholds as well. Coming back to what I was saying earlier,
I think both.
An issue with
I think both. I mean, the leasehold issue needs to be dealt with. There's something fundamentally uncomfortable with the leasehold market, and it needs to be considered.
Well, what we haven't seen is those increases in price, the percentage increase in prices for leasehold, especially smaller apartments. Whereas we have with the freeholds, the equivalent sort of number of square feet. Freeholds might have increased 20%, and leaseholds maybe 5 to 7.
Yeah.
So there's again, if you want to make a move from a leasehold, from a flat to a house, the gap's got bigger. So are people going to be able to run that gap using facilities like yours with your lender book? Are they going to be able to make the leap? Are they going to stay? Are they in their flat for a while longer?
No, I mean, again, it comes down to income, doesn't it? I mean, that's what it comes down to.
But also adventurous spirit from the lenders. Are they going to take on 95?
Well, we saw that coming. We saw that coming back. I mean,
that's back already.
Yeah, it's back already. 95% came back. It was removed very quickly, and it returned as quickly as it went.
Yeah.
So lenders want to lend in that. It is about affordability. That's what it all comes down to. Income multiples, 4.5 times joint. That hasn't changed.
4.5 times joint.
Yeah, absolutely. It's a big number. I mean, for the self-employed, during the pandemic, for individuals who got grants, not loans of course, but grants to see them through, can book that onto their accounts.
Okay.
Because obviously the grant was in lieu of an income that should have been there, so it's the same. It's the same thing. Yeah. And lenders are looking very favourably at the self-employed.
Is it still 3 years books or is it?
No. I mean, it's actually down to the individual what's better for them. Sometimes an average of 3 years is better than an average of the last year.
Yes.
But so there's different lenders. It's horses for courses really. But there are some lenders who will look at 1 year's account still. There's lenders who will look at contractors, and they'll look at, do you have a decent contract? It may only be a 6-month contract, but they'll annualise that, and then they'll multiply it.
Yeah.
So again, I think it's down to sensible lending. If a lender thinks you can afford it, I think probably the bigger thing people are going to find more than income multiples is, can people save up deposits? I think that's probably that's probably the biggest thing at the moment. I think, isn't it?
That's sort of loan to value, isn't it? Now,
Yeah,
so I was asking about the percentages.
Yeah.
And you said, I made reference to 95%, which I imagine is reasonably.
But with the house prices going up, that 5% deposit
becomes
is a lot richer.
Huge.
A lot richer than it was. So that deposit is a big.
So it's a big thing.
Is a big thing, and whether that's Bank of Mum and Dad again.
Are they still there, or have they got their own issues?
I think they'll always be there.
Okay.
I think they'll always be there.
Yeah.
I think we all, as a father of 3 myself, I'm looking at what can I do to help my children. In the past, education's always a thing. We want to educate our children well, but now it's, can I help my child get on the property ladder?
Yeah.
I think that's, and with the increase in prices, there's a lot of equity in properties. There's equity release options available, and I think maybe there's an argument sometimes where we help our children out now rather than when we're not here to help them out.
Yeah.
So,
is it right that equity release is sort of running at around 50% loan to value? Difficult to borrow more than that.
It's down to the age range really more than anything.
Okay.
50% for people sort of 65 onwards. 50% is about a sensible figure.
Okay.
You start moving up to your late 60s, early 70s, you can start pushing it to 60, 65%. And equity release is an interesting market actually. A lot of people are on interest-only mortgages historically. They need to pay off their mortgage. Equity release deals with that. As we said, helping your family out. And in the old days, equity release wasn't seen, didn't have a great reputation because it was linked into the interest rates, which were historically high.
Yes.
And then the value of your equity would reduce substantially.
Really quickly.
Where now lenders are building in fixed rates for the life of the mortgage, which gets rid of that, and they're building in security where they won't take the property off you, even if you go into a negative equity position. So they've really looked at how this product actually helps, and maybe for grandparents or parents helping the younger generation. Yeah. Maybe that's something that we'll see more of. I think we'll see more of it. I have a feeling we'll see more.
I think you're right about the element of interest-only mortgages and people who get pay them just keep on paying the interest for dozens of years and get to a point when in fact the lender will no longer renew because you're of a certain age.
And you don't want to move.
It's
your family home.
So
what do you do?
So what do you do? Thank you.
Yeah. What do you do? Equity release is there for a reason.
It's about the only option, isn't it?
About the only option. Yeah. So I think there's a lot to talk about in the property market and in the mortgage market. And it does change, but the fundamentals are the same. And I think 2022 is going to be an interesting year.
I think it will be interesting. I don't think there'll be the same volume of business next year in terms of, because so many people forced themselves into the front end of the year. It actually mopped up pretty much all the buyers to the back end of the year. So we did all our business in the first 6 months, and then the second 6 months have been much more demanding. I think next year will be much more even. I think
we're all ready for a bit of even. I think we're ready for a bit of even.
Isn't Christmas called even time?
I have no idea. But we'll go with it.
I think I just made that up.
We'll go with it. Sounds good.
Happy Christmas, Rob.
And to you, my man.
Cheers, buddy. Take care.
Take care.